On January 17, 2026, Nvidia lost $420 billion in market value. Microsoft erased $300 billion in just 11 trading days. And Silicon Valley whispered a sentence no one was ready to hear. What if AI was never the revolution we were promised? For 3 years, we were told AI would change everything: jobs, creativity, medicine, wealth, power. But today, investors are panicking. Companies are cutting AI budgets. And quietly, very quietly, big tech is pulling the plug. This is the story of the $1 trillion AI mistake. And why 2026 is the year the bubble finally burst. Let's start with one uncomfortable fact. AI didn't crash slowly, it cracked, then collapsed. In late 2025, Nvidia was worth more than Amazon and Google combined. Every data center, every startup, every government contract, all roads led to GPUs. Wall Street believed one thing: AI demand is infinite, but in Q1 2026, something changed. Suddenly, cloud providers slowed GPU orders. AI startups stopped raising money. Enterprise clients quietly canceled pilots. And then, earnings came. Nvidia missed guidance. Microsoft admitted Copilot adoption plateaued. Google revealed AI search reduced ad revenue instead of increasing it. That's when investors realized this wasn't exponential growth. This was front-loaded hype. Trillions of dollars weren't invested. They were assumed. Here's the part big tech never wanted you to understand. Modern AI is insanely expensive. Training GPT-5 reportedly cost over $3 billion. GPT-6? Internal estimates crossed $10 billion. And for what? Let's be honest. Most AI output today is auto-generated emails, SEO blog slop, generic images, and slightly better autocomplete. That's not a revolution. That's Clippy with a $1 trillion bill. The truth is simple: AI costs scale faster than AI value. Every improvement needs more data, more compute, more energy, more cooling, more chips, but the returns shrink. GPT-5 wasn't 10 times better than GPT-4. It was marginally smarter, sometimes, and enterprises noticed. In 2023, CEOs were terrified of missing out. So they bought AI copilots, AI assistants, AI analytics, AI strategy decks. By 2025, CFOs asked a dangerous question: what exactly are we getting for this? The answer? Employees used AI, then stopped. Accuracy issues created legal risk. Hallucinations destroyed trust. Costs exploded. Many companies discovered something shocking: productivity didn't increase. It shifted. Workers spent time fixing AI output instead of creating. So in 2026, AI pilots weren't renewed. Budgets were slashed. AI teams were downsized. Not publicly, quietly, because admitting AI failed would crash the stock even harder. Remember the promise: AI will eliminate boring work and free humans to do meaningful things. Reality? Millions lost jobs. Junior designers, copywriters, support agents, analysts. But productivity did not explode. Why? Because replacing humans with AI removed context, judgment, and responsibility. Companies discovered a brutal truth: AI doesn't understand work. It imitates it. So firms rehired humans at lower wages with more stress to clean AI's mess. This wasn't liberation. This was automation theater. There's another reason the AI dream cracked: physics. AI data centers now consume more electricity than small countries. Governments started asking, where's this power coming from? Who pays for grid upgrades? Why is water disappearing? In 2026, energy prices surged. Environmental pushback exploded. Permits slowed. AI didn't just need money. It needed infinite resources. And the world said no. Once growth slowed, the illusion broke. Investors realized AI revenue was delayed, margins were shrinking, and competition commoditized models. Every AI company started sounding the same. Same DMOS, same buzzwords, same promises. Wall Street hates one thing more than bad news: uncertainty. So money fled. Not because AI disappeared, but because the fantasy died. AI wasn't magic. It was infrastructure. And infrastructure doesn't justify trillion-dollar multiples. Let's be clear, AI didn't die, but the story did. The story that AI would replace everyone, that it would print infinite money, that it would grow forever. That story collapsed under reality. Just like .com, crypto, and the metaverse, each time the technology survived. But the speculators didn't. After every bubble comes something quieter: useful AI, boring AI, invisible AI, not hype. Not trillion-dollar promises, just tools. And maybe that's what AI was always meant to be. The biggest mistake of the AI era wasn't the technology. It was believing the hype more than the math. Here's the twist no one talks about. Every crash creates losers, but it also creates winners. And when the great AI hype bubble finally burst in 2026, the winners weren't who you think. It wasn't the small creators, the indie developers, or the dreamers building the next big thing in their garage. No. The real winners were the ones who were already winning. Think about it, big cloud providers, energy companies, defense contractors, and of course, governments. Why? Because when AI stopped being a flashy product, it became something far more powerful: infrastructure. And infrastructure always belongs to the powerful. All those small AI startups, the ones burning through cash to rent server time, they died. But behind the scenes, governments were quietly signing massive long-term contracts. Not for making cute chatbots or generative art. They were signing deals for surveillance, for cyber warfare, for intelligence analysis, and for population monitoring. The AI dream didn't disappear. It just changed hands, moving from the public square into the private corridors of power. Publicly, the big tech companies all sang the same tune. We're optimizing costs. We're streamlining operations. But behind the closed doors of their boardrooms, something far more significant was happening. It was the great silent AI reset. Entire AI teams were merged or dissolved. Ambitious moonshot projects were quietly killed. And most importantly, model sizes were capped. This wasn't because AI had failed. It was because the race to scale, to just get bigger and bigger, stopped making any sense. Executives finally had to accept a hard truth that researchers had known for years. Bigger models don't automatically equal better outcomes. Chasing another trillion parameters was yielding diminishing returns, while the costs for energy and data were skyrocketing. So 2026 became the year of the reset. Less hype, more constraints, more rules, more reality. The Wild West of AI development, that anything-goes era of limitless growth, was officially over. So why were startups the first to fall? They were sold a simple, seductive promise. Move fast, scale faster, and exit early. The reality was brutal. They were burning millions of dollars on compute power, trying to compete with the very companies that owned the cloud infrastructure itself. Imagine trying to win a race when your opponent not only owns the racetrack but also sells you the fuel at whatever price they want. It was never a fair fight. When the big tech giants decided to raise their API prices in 2026, it was a death sentence. Hundreds of startups, some with brilliant ideas and talented teams, collapsed almost overnight. Their fatal flaw wasn't a lack of vision. It was that they had built their entire businesses on rented intelligence instead of owning it. The dream was that AI would democratize innovation. The reality was that it re-centralized power into the hands of a few. But there was one problem that even the biggest corporations couldn't fix with money, and that was trust. By 2026, the social fabric was tearing. AI-generated scams became so sophisticated they were almost impossible to spot. Deepfakes didn't just pollute social media. They were actively used in election campaigns. Fake AI-generated evidence started showing up in courtrooms. The public conversation shifted. People stopped asking, "Is this new AI tool useful?" and started asking a much more fundamental question. Is any of this even real? Once trust breaks, everything slows down. It's the essential lubricant for technological adoption. And AI, the technology that promised to solve everything, had just lost the one thing it needed most: public belief. The magic was gone. Now, governments are never fast to act. But when they do, their impact is immense. And in 2026, the regulatory hammer finally came down. New AI laws, which had been debated for years, were rolled out globally. Suddenly, the concept of model liability became very real. If your AI made a catastrophic mistake, you were on the hook. The data used to train these models faced intense legal scrutiny, with lawsuits over copyright and privacy becoming commonplace. Suddenly, AI hallucinations weren't a funny quirk to be shared on social media. They were a legal liability. Algorithmic bias wasn't a theoretical problem for academics to discuss. It was a compliance nightmare. Every mistake had a consequence, and every consequence had a cost. The need for compliance killed the need for speed. And speed was the fuel that had powered the entire hype machine. If this all sounds dramatic, it's because it was. But it wasn't new. This exact pattern has happened before, time and time again. Think about the great railroad booms of the 19th century, the dot-com bubble of the late 90s, even electricity, smartphones, and the internet itself. Each time, the cycle was the same. A period of massive overinvestment fueled by unrestrained hype followed by a painful, inevitable crash. And then after the dust settles, what comes next? Quiet, steady, real value creation. The crash wasn't the end of AI, it was just the price of admission back to reality. So what kind of AI survives a winter like that? What comes next? I can tell you what it won't be. It won't be flashy. You won't be having deep, philosophical conversations with it. There won't be slick demos on a big stage or trillion-dollar headlines every other week. The AI that survives, the AI that will actually define the next era, is boring, and that's a good thing. It will be the AI that optimizes global logistics to reduce waste and get goods where they need to go. It'll be the AI that detects financial fraud in milliseconds, saving people from ruin. It will be the AI that improves medical diagnostics, helping doctors spot diseases earlier and more accurately. It will be invisible, working in the background, without any buzzwords, just boring, relentless effectiveness. So if you were one of the people who believed the hype, who felt that surge of excitement and infinite possibility, I want to be clear. You weren't stupid. You were human. Our curiosity and our optimism are what drive us forward. The mistake wasn't in believing in the potential of a new technology. The mistake was believing that any growth, in any part of our world, has no limits. Every generation believes their technology is different. That this time, the rules of history, economics, and human nature don't apply. And every generation learns the same lesson: reality always wins. Thanks for watching.